The poor works for money, but the rich have their money work for them. The idea of having our money work for us is such a desirable concept that got many of us got interested in investing and putting our money into good use. But the question is, how do we get our money work for us? There are two ways to do that. First, through investing, and the second, through trading. Although both are about making money in the financial market, but these two are entirely different things. Let's take a look at the differences and which one should you choose. Firstly, investing is usually long-term and trading is usually short-term. Investor will use buy and hold strategy to build wealth through buying and holding a portfolio of financial assets such as stocks, bonds, unit trusts, and other instruments. Traders, on the other hand, will use buy and sell strategy to build wealth through frequent buying and selling of financial instruments such as stocks and derivatives like forex, futures, warrants, and options. The investor's goal is for the financial asset that they buy to grow in value over long term and provide them profit through compounding returns over time. Traders' goal, on the other hand, is to profit through the price difference in the short term. The profit is usually one-off, where they buy at a low price and expect a price increase in a specific time, then sell it off to make profit from the price difference. Investment, since the strategy is to buy and hold for long term, it is usually more passive. And after deciding the financial asset to invest in, they will buy and hold and then follow up in periodic reviews. For traders, since the strategy is to buy and sell in short term, it is usually much more active. They are constantly analyzing the market to predict the price movement. While both will use fundamental and technical analysis to analyze their assets, an investor tends to lean towards fundamental analysis, as their focus is often longer term return. A trader, on the other hand, will lean towards technical analysis, since it's able to tell the current market trend, the supply and demand. This way, they can better predict the price movement in the near future. Investor will usually focus on intrinsic value, thus the underlying asset has a fundamentally strong business model that can sustain and create value over a long term. A trader, on the other hand, will focus on extrinsic value. What is the current market supply and demand for the financial instrument? What is the price movement going to be? Will the price go up in the short term? Investors tend to invest in long-term assets such as stocks, bonds, ETF, and unit trusts, since their focus is on building long-term gain. A trader, on the other hand, will usually use stocks, derivatives such as forex, futures contracts, options, and warrants to increase their profits. To illustrate the difference further, imagine in the mobile phone business, an investor will be like an Apple or Samsung retail store who believe that their brand is the best and will be a great product for the people. So they open the shop in the shopping mall and sell the product that they believe in. They want to grow the brand and become the biggest supplier of mobile phone for people. Trader, on the other hand, is like a guy who noticed that currently there's good demand for Apple product. So he looked for the cheap supply, he buy it and sell it off very quickly at a higher price. Then next week, he see that Samsung has a higher demand, so he will do the same, buy at a lower price and then sell it off at a slightly higher price in the market. And he'll keep doing that to gain profit. So who are some of the famous investor and famous trader? The most famous investor is Warren Buffett and Charlie Munger. If you want to learn more about investing, I would encourage you to read this book, The Intelligent Investor by Benjamin Graham, and The Snowball. It's a biography of Warren Buffett. The most famous traders are George Soros and Paul John Tudor. If you want to learn more about trading, you can read Market Wizards, Interview with Top Trader, and The Disciplined Trader by Mark Douglas. As we can see, investing and trading, while both use money to make money, it is two very different things. There's no right and wrong in these two methods. Both methods can make you very, very rich if you do it right. In Malaysia, if you are interested in trading, one of the classic and most popular trading instrument in Malaysia is the crude palm oil futures. It is basically a contract that agrees to buy or sell at a specific price at a specific time. So, as a trader, you can buy and sell the contracts in the market to profit from the price difference. By the way, If you are interested in futures trading, you can check out Kanana's Back to the Futures campaign. There's 20,000 ringgit of rewards up for grab. You can check them out in the link below. So, after learning about investing and trading, which do you think is more suitable for you? Do share with us in the comments below.